Welcome to the deep dive. Okay, we've got the research stack here on M Legasi. It's Mah Sing's huge freehold township out in Semenyih. Our mission today, cut through the noise. Is this a smart, long-term investment? And, just as important, is it actually a good place for a family to live? Let's start with the headline news because it's pretty striking. Phase 1, Impira, saw over 90% take-up almost immediately. That really validates the, RM 635,000 starting price.
It does, a very strong signal from the market. But the sheer scale is what really defines this project now. It started, at 500 acres, pretty big already with about RM 3.3 billion GDV. But then came the M Legasi 2 acquisition. Now we're talking the total integrated land bank of 775 acres. Massive.
735 acres. Okay, that's seriously big. Doesn't that sometimes mean projects drag on for decades, though? Does that fast initial take-up really offset the risk of living in a construction zone?
Well, it actually shifts the dynamic. See, that kind of scale gives the developer Mah Sing immense control. They're not just building houses, they're essentially building a mini-town. This allows them to create a largely self-contained ecosystem. They control future amenities, parks, maybe even some commercial. It drives value internally.
Less dependency on outside infrastructure, then.
Exactly, which could be slow or unpredictable.
And the houses themselves, what are we looking at?
Affordable, spacious two-story terraces. Think 4 bedrooms, 3 baths. Starting around 1,555 square feet.
Right. And crucially, individual titles, not strata.
Yes, that's a key point. You own the land. More flexibility for renovations down the line, and usually lower long-term maintenance fees.
Okay, let's pivot to lifestyle. They're pushing the quality of life angle hard, right? Big park, secure, a 13-acre central park, 247 guarded community. Plus, it's near places like Broga Hill for that nature escape. Sounds pretty good on paper.
It does sound idyllic,
Yeah.
but here's the major conflict zone for Semenyih generally. The traffic.
The commute.
The commute. You've got great highways nearby, theoretically, LEKAS, Silk, but the feeder roads, like Jalan Semenyih, chronic congestion during peak hours, it's a real headache.
Yeah.
Seriously stressful. You have to ask yourself, is that lovely park worth a potentially brutal commute, especially if you're heading into KL daily?
So the livability really depends on your work situation.
Absolutely. It's best suited for people working remotely, maybe hybrid schedules, or those employed nearby in the southern Klang Valley, Kajang, Bengi, that area. The KL commute is the big hurdle.
Okay, so if daily life has that significant friction point, let's talk about the money side. Does the investment case stack up long term?
Fundamentally, yes, but you need patience. This isn't about high rental cash flow right now. Projected gross yields are okay for landed property, maybe 2.2% to 3.5%, somewhere in that range. The real story here is long-term capital appreciation.
Driven by what exactly? The scale maturing.
Primarily is the entry price point versus the established competition. M Legasi started around RM 408 per square foot. Now, compare that to a nearby benchmark like Eco Majestic, which is closer to, say, RM 611 per square foot.
Right, that's a significant gap.
It is. That's the valuation arbitrage. As this huge 775-acre township develops and matures, the expectation is that the value gap will narrow, creating capital gains for early buyers.
Makes sense, but what about execution risk? Building that much, keeping quality consistent. Any concerns there? Mah Sing's had some historical bumps, haven't they?
That's a fair question, but they seem very focused on addressing it. They've highlighted high QASIC scores on their recent projects. That's the industry quality benchmark. We're talking 84% to 86% on other M-series developments. Plus, M Legasi itself has GreenRE certifications, silver or bronze, which signals a commitment to build quality and sustainability standards.
Okay, so they're putting measures in place.
Seems like it. They know quality perception matters, especially on a project this size.
All right, let's wrap this up. What's the final verdict for you, the listener? Well, it seems like a two-part story. For owner-occupiers, especially those working remotely or locally, it offers great value, space, and lifestyle potential if you can manage the traffic situation. And for investors, it looks like a solid long-term play based on that price arbitrage and the sheer scale of the development, assuming you have the patience for that value to mature. It definitely taps into that trend of people wanting more space, even if it means moving further out. So here's a final thought to leave you with. M Legasi 2 plans include adding commercial hubs, more amenities right within the township. If they successfully build out that internal ecosystem over, say, the next 5 to 10 years, how much will that self-sufficiency start to outweigh the external traffic headache when it comes to driving long-term property values? Something to consider.